Welcome to Skytech-Lens. It all began not with a law, but with a late-night tweet from the White House. The demand, America's largest retailers must absorb a sweeping 30% tariff on imports without raising prices. For Walmart, this was an existential threat. Their model relied on global sourcing and razor-thin margins. Inside Walmart HQ, panic set in. CFO John David Rainey called the demand mathematically impossible. Absorbing the tariff would erase profits and devastate the company. The fallout was immediate. Over 100 top executives resigned, leaving Walmart leaderless. Walmart responded by shutting down 10 major distribution centers, severing the arteries of American retail. Delivery routes were canceled overnight. The flow of goods ground to a halt. This wasn't just a corporate shakeup, it was a logistical blackout. The just-in-time system, once Walmart's strength, became its greatest weakness. With no buffer, the shock rippled outward at terrifying speed. The shutdown signaled the end of the old retail order. A new, chaotic era for American shopping had begun. The shutdowns hit home fast. Within days, supermarket abundance vanished. At first, it was just a few empty spots, then entire aisles were bare. Staples like pasta, tinned tomatoes, and cooking oil disappeared. The baby care aisle was hardest hit. Parents scrambled for formula and nappies. With distribution hubs closed, the flow of goods simply stopped. Modern stores, built for daily deliveries, emptied in days. Shipping costs exploded. A container that cost $500 now costs $6,500. Only the biggest players could afford to move goods. Small retailers were frozen out. On the farms, the crisis reversed. Food was wasted. Dairy farmers dumped milk. Pig farmers culled livestock. The bridge from farm to table had collapsed. Scarcity and waste existed side by side. The American supply chain, once invisible, was now painfully visible in every empty aisle. The system had failed, leaving devastation at both ends. The shelves told the story. The old abundance was gone. For shoppers, disbelief turned to anxiety. Grocery runs became desperate hunts. Hoarding set in, making shortages worse. Online groups sprang up to barter and share tips on where to find essentials. Prices soared. Cheese doubled, oil tripled. Families cut back, switching to whatever was left. The promise of everyday low prices was gone, replaced by scarcity and sticker shock. For workers, the crisis was personal. Tens of thousands lost jobs as warehouses closed. Truckers and warehouse staff found themselves suddenly unemployed. The trucking industry was gutted overnight. Pride in keeping America stocked turned to anger and confusion. Silent warehouses and idle trucks became symbols of a broken system. While politicians argued, families and workers faced a harsh new reality. North of the border, Canada was ready. Years of planning had positioned it as a new logistics hub for North America. As the U.S. faltered, Canadian exports to the U.S. surged by 22%. Ottawa's One Canadian Economy Act and Building Canada Act streamlined trade and supercharged infrastructure. Rail capacity doubled, ports modernized, and digital systems optimized every shipment. Drones and AI kept goods moving smoothly from Halifax to Vancouver. At ports, new cranes and automation doubled output. Even unions adapted, working flexible shifts to keep goods flowing. Canada's quiet preparation became a national triumph. The most visible sign of change was in American grocery aisles. As U.S. supply chains broke, Canadian products filled the gaps. Maple leaf logos appeared on milk, cheese, and meat across the Midwest. Canadian farmers ramped up production, adding shifts to meet U.S. demand. Walmart Canada onboarded 10,000 new Canadian products for the U.S. market in just days. The old east-west flow of goods was replaced by a new north-south corridor. American families, once facing shortages, now relied on Canadian staples. The shift wasn't just a patch, it was a new food map for North America. Canada's preparedness became America's lifeline. The quiet takeover happened one shopping cart at a time. None of this would have worked without technology. Canadian platforms like Shopify enabled instant connections between U.S. buyers and Canadian sellers. Digital paperwork and real-time compliance checks replaced bureaucracy. AI-powered logistics optimized every shipment, rerouting trucks in real time. Even small U.S. businesses could tap into Canadian supply lines with a few clicks. Canada's unified digital infrastructure outpaced America's patchwork systems. The new supply chain was built on code and data, not just concrete and steel. Technology made the north-south trade shift fast and permanent. Investors followed the goods. As the U.S. system faltered, capital poured into Canada's stable, efficient infrastructure. BlackRock invested billions in the Halifax to Chicago rail corridor. Gulf and European funds financed new freight hubs and port upgrades. Financial data showed a 4-to-1 preference for Canadian logistics over U.S. routes. Canadian National Rail's stock soared. U.S. logistics firms slumped. The verdict was clear. Canada was now the continent's logistics powerhouse. Money and goods were both heading north. The market had chosen its winner. The supply chain crisis split the continent in two. In the U.S., warehouse and trucking jobs vanished. Workers were left stranded. Some truckers took contracts from Canadian brokers, working for foreign companies in their own country. In Canada, logistics jobs boomed, new shifts, new hires, and a shortage of skilled workers. Port unions embraced change, boosting productivity and pay. The border became a dividing line. Decline in the U.S., opportunity in Canada. National pride surged north of the border. For American workers, the future was uncertain. For Canadians, it was a time of growth. By late 2025, a new North American trade map had emerged. Canada's corridor from Quebec to Manitoba was now the continent's beating heart. Powered by tech, renewables, and smart policy, it was built to last. The U.S. tried new tariffs, but Canada was ready, countering with its own and securing new trade partners. Investment in Canadian infrastructure was long-term, not a quick fix. New trade relationships proved reliable and profitable. The U.S. struggled to regain trust and stability. For now, Canadian trucks stocked American shelves, and Canadian ports thrived. The quiet takeover was complete. Whether it's permanent will define North America's future. Thanks for watching a video. And subscribe to the channel Skytech-Lens for more updates. Thanks.